Well, good afternoon. Mark Milam here, your mortgage professional with Highland Mortgage, coming to you this Friday, June 25th, with this week's interest rate summary and market update. So the world of interest rates relatively calm this week. Not a lot pushing rates higher, not a lot bringing rates lower, and that's fine because interest rates are in a really good position, especially for where we thought we'd be in the middle of 2021. We had anticipated inflation would start to take off as the pandemic abated, as the economy recovered. And while we have seen inflation uptick, we have not seen the associated interest rates go much higher. And that's good news. We'll take it. We'll take a week of not a lot of drama as it pertains to interest rates. But where there was drama this week was on Wednesday when we found out that the president, going through the Supreme Court, was able to relieve the acting director of the Federal Housing Finance Agency from his post and replace him with his interim choice. So really the director of the agency is a Trump appointee. He has that post for 5 years, and really until this Supreme Court ruling this past week, he could only be relieved of his duties for cause. But the president, lobbying the Supreme Court, got approval that the president should have, or the executive branch should have, the authority to replace the Federal Housing Finance Agency's director at their discretion, which is exactly what they've done. So they asked for the resignation of the sitting director and have replaced that individual with Sandra L. Thompson, formerly of the FDIC. And really what we're seeing here is a shift from the Trump administration's goal of privatizing Fannie Mae and Freddie Mac, basically moving Fannie Mae and Freddie Mac out from under government control and making them private entities, and now shifting to the current administration's goal of really focusing on other things like more affordable housing, more access to credit for communities of color. Certainly, we're very interested in our profession of seeing what's going to happen to some of the most recent sort of onerous aspects of the Federal Housing Finance Agency. We saw an adverse market fee put into place for refinances, meaning now refinance rates are markedly worse than purchase rates, somewhat inexplicably. So we're interested to see what happens there. And then also the most recent announcement of a restriction for Fannie Mae and Freddie Mac on the amount of investment property and second home mortgages that they can buy. So there's this 7% restriction that got put into place earlier this year. What that's all resulted in is less access to competitive rates for second homes and investment properties. So all of these things are now back on the table. Nothing has specifically changed as of yet, but this is relatively new news, only been going on now about 48 to 72 business hours. So we're anxiously awaiting to see what's going to happen next with the Federal Housing Finance Agency, the primary regulator of Fannie Mae and Freddie Mac. Of course, if you have any questions at all, please don't hesitate to shoot me an email, mark.milam@highlandmtg.com, 404-395-1102. Have a good weekend, everybody.